How close are we to a monetary reset? Are we seeing gold and silver buying just as a safe haven investment, or is there more to it? Gold has been moving. It's over $4,100. Silver is fighting with $53 an ounce right now as well. And we just heard Jerome Powell speak at some National Business Association conference about employment, inflation, and potential more rate cuts as well, but also hinting at an end of the rate cut cycle already. So lots of things to discuss. Really want to figure out, like, does this gold market have legs? And it sounds like I'm greedy, but I really want to understand what has been moving gold to this level that we're at, and is there more to come? Same with silver, of course, as well. And we'll also discuss the Q3 reporting season, which is upon us, with my guest, John Rubino of RubinoSubstack.com. Really looking forward to having him back on here in a few short seconds. But before I switch over to my guest, hit that like and subscribe button. Helps us out tremendously bringing guests like John onto the program, and we much appreciate it. Thank you so much for doing that. Now, John, it's great to welcome you back on Soar Financially. It's good to see you again, my friend.
Hey, Kai, it's great to see you too.
We have lots to talk about, and we'll try to squeeze it into 30 minutes here, John. Monetary reset or safe haven buying, all of the above. Like, we really need to understand what is driving gold and silver higher, and potentially what set it off as well. From your point of view, maybe a 30,000-foot point of view as well, like, what is happening in the gold and silver market right now?
Well, there are so many moving parts in precious metals right now. Backwardation and lease rates, and um, so much is going on that it's hard to say which thing is causing this thing that we've been talking about as inevitable for such a long time, which now is imminent or in progress or whatever. Finally, we've got the precious metals bull market that we've been waiting for years and years. On the gold side, I think clearly central bank buying is a big part of this. Now, the world central banks have concluded that, first of all, the dollar is not a good currency to hold because we're weaponizing it in the U.S. and using or keeping dollars as your reserve asset is kind of making a political statement that a lot of countries don't want to make these days. So they're switching to gold for that reason, and at the same time, it's clear we're in the process of inflating away the major fiat currencies. That is happening, and there's no way to stop it now. Because, for instance, in the U.S., we've got a massive deficit that is basically structural now. It's built into the process. We're piling up huge amounts of debt. Our interest rates at the long end of the yield curve are higher than they've been for a while. And that means the interest cost on our debt is soaring, and that money has to be borrowed, which increases the deficit and the debt next year, which increases the interest cost on our debt. And that's an unstoppable process. And it's the same with most other countries right now, where they've entered kind of monetary death spirals. France and Germany in particular are like that, and China is certainly in that process now. And so the central banks of the world are looking at this and thinking, well, we need something that is not inflatable. And in other words, something that central banks can't just make more of out of thin air and devalue in that way. And gold is the historical asset. That's the oldest money of humanity. And that's where you go when you're spooked. And the central banks of the world are clearly spooked, and they're buying without really much regard for price. So that's what's sending gold up, nicely through $3,000 an ounce, with hardly a look back. And now we're up in the fours, and it's it's completely possible that 4,000 is the new floor, not the old ceiling. So we'll see. But I think that we are in the early stage of that monetary death spiral that we've been talking about for so long, and that's inherently good for precious metals.
100%. And you used one term at the beginning when you were answering. You used the term backwardation. I picked it up because we haven't discussed it yet on our channel. Maybe you can explain what it means, but also what does the term mean, but also interpret, like, what kind of signal does it send here, John?
Yeah, backwardation means when something in the moment. In other words, buying something in the spot market is so much more attractive than buying it in the futures market and having to wait for it, that you're willing to pay above the futures price to buy it in the spot market. Normally, that's not the way markets work. If you go further out at a time, the price is higher because you have to incent somebody to hold on to whatever it is you're buying until you're ready to buy it at that point in the future. That's called contango, and that's a normal market. Futures are higher than spot. When spot goes above future, that normally means that supplies are very tight, and people are spooked by that, and they're willing to pay up in the moment to get the asset, whatever it is. And that's happening in silver right now. The spot price of silver is above the 1-year price of silver's futures contract. And the implication of that is that silver supplies are tight for whatever reason, and people are willing to pay up to get it in the moment. And that is something that people are paying a lot of attention to, because frequently backwardation precedes even higher prices, because the tightness in the market doesn't just go away. And the tighter it gets, the higher the price goes. So a lot of people are looking at that with silver and thinking that that's a good reason to expect a higher silver price going forward. But like I said, there's a million cross currents and moving parts and things like that. So we don't know right now which of those moving parts will be the thing that determines price in precious metals. But I will say that this is fun to watch. It's about time. As somebody who started stacking in like 2015 and suffered through the doldrums for nearly a decade and watched tech stocks go through the roof and Bitcoin go through the roof, it's nice to be on the winning side of the calculus for once.
Well, that sort of leads to the question: is it just gold's turn now, or is there more to it? As you said, we've seen the tech stocks, we've seen crypto rally, and now it's the precious metals. The question is it just recycling of that money, or is there a bit of a difference? Because I kept asking, or I've asked other guests as well, are we just part of the everything bubble that we're seeing, or is it different?
Dogecoin's next act has arrived. It's not a meme anymore. The Dogecoin Foundation's corporate arm, House of Doge, announced last Monday that it's going public on NASDAQ under the ticker TBH. Backed by Citadel, Mosaics, and Pantera Capital, and partnered with Robinhood and 21 Shares, House of Doge is building a real-world utility that Dogecoin was always meant for. This isn't just another crypto holding company. House of Doge is the engine driving Dogecoin's next era, developing payments technology, yield-producing products, and partnerships that push Dogecoin into everyday life. And it's already happening. House of Doge just announced a new partnership with InKind, bringing Dogecoin payments to over 4,500 restaurants, bars, and venues across the US. Led by Marco Margiotta, a payments veteran who sold his last company, Fiat, for $270 million, and supported by the Dogecoin Foundation, backed by Elon Musk and Vitaly Buterin, this marks Dogecoin's mainstream financial era. And with Clean Core Solutions serving as the official Dogecoin treasury, the infrastructure for large-scale adoption is already in place. Owning Dogecoin is owning the currency. Owning TBH is owning the future of what that currency can do. Learn more at houseofdoge.com. This content is for informational purposes only and does not constitute financial advice or an offer to sell or buy any securities. Always do your own research before investing. Now, let's jump back into the conversation.
Again, there's a lot happening there. First of all, there's a lot of profits in Bitcoin and Nvidia right now that people rightly want to protect. So maybe they cash out a little bit, but then they have to do something with that money, right? And then they look around and gold, until very recently, was the important asset that had a monetary rationale for owning it, and it hadn't really moved that much yet. For the longest time, gold bounced off $2,000 an ounce, and then it finally broke through and then just took off. But there was potentially a lot of money from other sectors chasing it that played a role in that process. And I think, tech stocks are insanely overvalued right now by historical standards. Cryptos are, at least in the case of Bitcoin, is recently it was near its all-time high, and then it got smacked. And that, remember when we had that little tiff with China, the little trade war that lasted 2 days until they figured out what their translations were actually saying back and forth. And now we're not in a trade war anymore. Well, stocks tanked that day, and Bitcoin had or cryptos in general, had their biggest down day in history. Something like $19 billion got wiped out of Bitcoin accounts and crypto accounts, while gold went up and silver went up. So that told a lot of people what is safe and what is unsafe in this environment. And, that probably sent a lot of profit-taking money into gold and silver as well, But again, you get the central banks on the one hand, you've got currencies being devalued at an accelerating rate. You've got massive profits in lots of different sectors that need to be protected. All of that is probably playing a role in precious metals getting their turn. But I don't think that just capital flowing in and out of different sectors is most of the story. I mean, longer term, precious metals are a death of the fiat currency experiment story. In other words, when the euro and the yen and the dollar cease to function as legit currencies, which we are headed for, then you totally want to be in precious metals. And then the calculus of how far up they can go in like dollar terms starts to get really weird, because if the dollar goes to zero, which most fiat currencies have done throughout history, then gold goes to infinity in dollars. Is that our price target now? So there's just a fascinating story unfolding right now, and a big part of it is the end of the fiat currency story. And the questions that raises involve where you put your wealth when the major currencies are being inflated away at an accelerating rate. And gold and silver are obvious winners in that case. So if you're short-term oriented, then you care about profit taking in other sectors flowing into precious metals. If you're longer term oriented, then you are all about the death of the big currencies and how you want to be as far away from that as possible. And gold and silver are about as far away as you can get.
Yeah, it brings an interesting question to mind as well. But before we get to that, to infinity and beyond, quoting Buzz Lightyear, by the way. Maybe instead of you on the thumbnail, I'll use Buzz Lightyear and just. No, but it brings an interesting question. Like, the U.S. dollar is just the last few days, of course, and seemingly stronger while gold is going up, but also the DXY is going up. So if you were to read that on a daily basis, of course, there seems to be a bit of disconnect, because I'm trying to figure out, yes, the dollar, and we can all agree that the fiat currencies are dying, but at some point we're past equilibrium. Like, gold is accelerating at such an insane pace. When do we hit zero on the dollar at this point? Does the question make sense? It's not a timing question. I'm not asking for a day, but it feels like at 4,100, how close are we to the death of the dollar?
Well, I don't think the dollar dies. I think there will still probably be something called the dollar 10 years from now, but I think we'll have to do a reset of some sort. So, if you're asking where the ascent of gold in dollar terms ends, it's when we do the reset and go back to a gold standard or whatever else we put in place of the current fiat system. So that depends on the wisdom of the people in charge and the stress level that the people in charge are feeling, because they could do it next Sunday. They could just announce on a Sunday night that we're back on a gold standard with gold at $10,000 an ounce, which is a massive dollar devaluation, but not anything like the dollar going to zero and gold going to infinity. Or we can struggle with this process for a really long time, with the people in charge resisting giving up the power to create money out of thin air to the very last second, in which case you get chaos, and you get panic buying by the entire world of inflation hedges and safe haven assets. And in that case, the price of gold in dollars could be much higher than what we're talking about now. But that won't be the kind of world you want to live in. So yes, your gold will be worth $100,000 an ounce, but you'll be in the middle of a civil war or something like that. So good luck holding on to your gold. So let's hope for $10,000 gold and us moving back to a new gold standard globally, and then giving us a chance to grow organically again and be safe, and to be able to invest with some sense of what the world will be like when our investments are ready to be sold. So here's hoping, but I don't think the guys in charge are wise enough to do the really smart thing, which is a near immediate global currency reset. I don't think they're ready yet.
Yeah, it's like I think we discussed this before, John. Like I think we're in the early stages of the reset. I think that what do you call it? The switches are being aligned or whatever it is. Like I was thinking of a German saying, but it seems like the wheels are put in motion. I think is maybe the right term here on the monetary side. I think we talked about gold. I think we all understand while gold is rallying, central bank buying. Of course, we all know they're buying gold, but they're not buying silver. So the question now, John, is like, why is silver rallying? Why is it catching up to gold? It's actually outperforming gold year to date now as well, sitting at about, $52 as we speak here, 60% year to date, gold about 53% year to date, if I'm not mistaken. What's silver's role in all of this? Is it just tied to the hip with gold, or is there more to it?
Well, in a normal precious metals bull market, gold moves first because that's the name brand asset. You go to your financial planner and say, "Hey, I want to be protected against inflation," and they will grudgingly put you in gold and maybe gold mining stocks or something like that. And that normally sends the price of gold way up early on, especially relative to silver. And then people start looking at, a Krugerrand or something like that, this thing that's maybe the size of a U.S. quarter that is worth thousands of dollars. And that doesn't seem like a good deal anymore. And then they think, well, how much silver can I get? And you get a tabletop full of silver for the price of an ounce of gold at the inflection point. And at that point, people start buying silver because silver is related to gold. It's a monetary metal from way back. And so it's kind of a lesser version of gold in monetary terms. But there's a price at which it becomes a superior thing to buy. And so people start piling into silver, and it's a small market. It's thinly traded, so it doesn't take much generalist money coming from outside to send it through the roof. And then you get silver dramatically outperforming gold. And we've kind of hit that stage right now. So that's really the only explanation that you need, is that we're in a gold bull market, and that's pulling silver along like a slingshot. It stretches, and then it just takes off and exceeds gold in percentage terms. That's happening now for sure. But with silver, there's a whole other side of the story, which is what makes it so compelling. It's a very important industrial metal. There's silver in solar panels. There's silver in electric cars. There's silver in missiles, and they're not telling us how much silver is in each missile. But as the global arms race accelerates, and missiles turn out to be able to avoid or to overwhelm anti-missile systems, then a lot of new missiles are being ordered right now. So that's also putting upward pressure on the price of gold or of silver. And there doesn't seem to be a real end to that process. And, if we have a global deflationary collapse, then we won't have as many electric cars or solar panels be sold. But as long as the economy is still being flooded with liquidity from governments, running massive deficits because they don't know what else to do, we're still going to sell a lot of solar panels and electric cars. And as long as the world is blundering into World War III, lots of missiles are going to be built. So right now, industrial demand for silver is about equal to the amount of silver that's being produced in today's mines. And then you add in investment demand, and there's a big deficit in the silver market. And that deficit is very possibly right now turning into a shortage in which panic buying becomes the order of the day, because silver is now considered to be what's the term for it? A critical metal, let's say, in the U.S. And that's leading a lot of entities that are going to need silver going forward to buy it now. So everybody's stockpiling. And there's just not enough silver to cover all of those things I just talked about. So it's completely possible that silver outperforms gold for quite a while longer, and maybe we see triple-digit silver. It's good. If we went from 20-something to 50 in a heartbeat, and the real panic buying has just barely started, then 100 is not out of the question. We could easily see something like that. And especially when you look at what some of the other hot assets have done lately, like look what Bitcoin did, and look at NVIDIA. You don't need an NVIDIA level move in silver to get to 100. So that complicates the strategy situation for stackers and for people who have a lot of precious metal stocks, because we're at 50, which used to be the high point. That's what silver has bounced off of twice so far. And should we take our profits now, or should we just assign a new upper limit to silver and say it's 100, and then start taking profits at that point? I don't know. I'm not really selling much at $50 an ounce. I've got some covered calls written on some mining stocks that if they stay where they are right now, I'll be forced to cash out of those mining stocks, and so I'll raise some cash in that way. But I'm holding on to the vast majority of my silver-related stuff just because that $100 story seems very compelling and not at all crazy, given all the different sources of demand there are for silver right now and the limitations on its supply. So I think short squeeze is a very, very possible thing in the next year or two. And I think $100 an ounce is a very reasonable target when that short squeeze really hits.
We were just talking about the short squeeze or potential short squeeze that's actually happening right now as we speak. You mentioned lease rates at the beginning. We're looking at 100% lease rate in particular for silver right now as well. And maybe from your point of view, like, are we in a silver squeeze already, or is this more of a logistical challenge? What do you think this current environment is on the physical side?
Well, there is the logistical element, and in every silver, I won't say squeeze every single time, but every time there's a really tight silver market, the issue is that not so much that the world is running out of silver, but that some segment of the refining population, the mints, are running out of some basic kind of silver that they need to turn into the things that people are trying to buy. And that's the case again now. There's apparently enough silver coming out of the mines to max out the silver refiners right now. So if there was more refining capacity, we would have more finished product, because there's enough silver coming out of the mines right now that we could be running at higher rates. So there's the logistical issue that probably is playing a role here. But at the same time, you got all that other stuff. You've got the military industrial complex of the world stepping up their missile production and needing silver for that. And you've got electric cars being, more popular than ever, and solar panels. And, it goes on and on from an industrial demand standpoint. At the same time, the investment demand for silver is ramping up because gold is $4,000 an ounce. So I don't know that the logistical thing is the main part of the story. So I think it's possible that even when the kinks in the supply chain get ironed out, you still have shortages of silver, at least in certain areas, and that still leads to potentially higher prices. So, and the currencies are being wiped out. As the global fiat currency death spiral continues, none of the rest of this stuff matters, because you're going to get gold going way up and it'll pull silver up. And so silver, even with that little sliver of the story, just that one part of the story, is still something that you definitely want to own at these prices.
Absolutely. Like, and if you're a stacker, just by definition, you hold until the reset is happening, right? So you don't sell on any price moves. Is that the fair definition of a stacker?
Well, it's the ideal definition of a stacker, and most people who stack, including myself, go into it with that attitude. But then, the older ones of us can remember when silver hit $50 an ounce last, and then went down to what did it bottom out at after that? I think like $12 an ounce, and it was an even bigger drop in the 1980s when silver hit 50 way back when. It dropped even harder, and so you can't help thinking, well, maybe I should take a little bit off the table since it's at 50 again, and that's kind of a magic number for silver, even though it's going higher. But what do you tell your family if you had X amount of money in silver and you didn't take any of it out to buy that new car or to put the kid in private school?
Just don't tell them. Don't tell them, John.
Yeah. You're lucky if you're a stacker and your family's not paying attention. That's the ideal kind of family.
There will be signs. Like it's that
Yeah.
famous meme. There will be signs. Like when you come home with a new boat behind the truck or something, there will be some.
Yeah. Yeah, there will be. So you have to control yourself. See that the other advantage of taking profits now is that you get to buy yourself that big present that you really want. That toy that's calling your name out there. And so there are reasons to take profits. And I would never tell somebody with an embedded profit not to take some out because round trips are a real thing, and they're just a fact of financial life. And nothing feels worse than having a bunch of money and then seeing that money evaporate because you did not take some of it off the table. So I get it. I get the interest in protecting profits, even for hardcore stackers. I'm sure they feel the same thing, and that maybe they just have more self-control than the average investor. But we'll see some profit taking, and I'm told that dealers, street level coin shops and things like that, are seeing a lot of silver being brought in. So there are a lot of people out there responding to $50 silver by cashing out, and they might not be hardcore stackers, but they're people with silver and they're selling it. So that's another moving part in this story.
Absolutely.
How much profit do people want to take? And we can't know that ahead of time, but hopefully it's not too much.
No, it was like there were a lot of free money given out during the COVID crisis. Of course, people went out and bought silver, long lines in front of the bullion stores, using that government money to buy to trade paper money for real money. Right, so always love those memes. John, let's move on. Let's talk about the mining stocks. We have about 5 minutes left here in the conversation, and we need to talk about your expectations for the Q3 reporting season that is just upon us here. I think Newmont should be reporting any day now, at least some production results from the third quarter. What are your expectations? What should we be paying attention to?
Well, the gold and silver miners are just having the best time of their life, because they were forced to control their costs by a really weak market for a long time, and so they remember when the last time there was a precious metals bull market and they didn't control their costs very well. So they've been basically pretty prudent. And now that gold is about $4,000 an ounce and silver is up around 50, and all along that trip, they've been generating good results. The last 3 quarterly earnings season for the precious metals miners they started good and they've gotten progressively better. And that's attracting attention from generalist investors who look at momentum. If you look at earnings momentum, the miners are crushing it. And now if you look at price momentum, same thing. These mining stocks are showing up on a lot of generalist screens, and they're attracting some outside money for the first time in a really long time, and so they're doing great. There's my Substack portfolio that I make available to subscribers has a ton of stocks that are in the 100% club, that have doubled at least in the last year or so, and this next quarterly earnings season is going to be the best ever because gold and silver went up in Q3 relative to Q2, and Q2 was phenomenal. So now Q3 numbers are going to come out, like you said, pretty soon. That's a 1 month thing happening right now. The numbers will start coming out, and then they'll be everywhere, and they're going to be great. They're just going to be sequentially and year over year spectacular for a lot of these miners. And people who pay attention to those kinds of momentum are going to see that. So I think there's a decent chance that if gold and silver don't tank in the next month or so, that these great results are going to result in some nice pops in some of these stocks, because people are going to say, 110% increase year over year and a 40% increase quarter over quarter. Oh my God, that's massive momentum. I'm going to buy this stock without necessarily even knowing what the stock does. So that's the kind of thing that happens towards the end of precious metals bull markets too. So I think this is happening a little early, just because of the fiat currency collapse issue. But it's still a fun thing to watch, and historically, it's led to some spectacular runs in the precious metals miners. And so I think we've seen part of that now. Maybe you could say the easy money has been made but I think that there's a decent chance that that we see a really good environment for the mining stocks, at least in the next month and maybe for the next 2 or 3 months.
Yeah. Following up on that as well, like on your Substack portfolio, John, like miners, of course, we just talked about. Personally, I'm expecting insane results as well. Average gold price should be $3,750 or higher. I don't have the exact number in my head here for Q3, but about $350 higher than in Q2 per ounce, just on top of it, just for doing nothing else than they've done before. Absolutely fantastic. But in your portfolio, like how are you weighted miners versus developers versus explorers in this part of the cycle?
Lots of royalty companies from the beginning. I set up this portfolio in 2023 and loaded up on the royalty companies, and they've done great. And then some producers, some explorers who have been the big disappointment, although they're coming back now too, but some of those explorers did not do well. And then a lot of ETFs, because the ETFs are a lot of where that's where the generalist money flows in first, and they have actually outperformed most of the other mining related stocks in my portfolio. So now I'm kind of frozen with an excellent portfolio, but I would like to add some other stocks, but the ones I haven't added that are high quality have gone up 150, 200% year to date. And is this the time to add them or not? I'm not sure. I'm kind of wrestling with that. But generally, the precious metals portfolio I set up was a really broad-based one. And the stocks that are in there now still have great prospects. So I don't feel any need to replace them with something else. But it's been a hell of a run, and it's this is the kind of thing that you hope for when you get into a sector. You hope it turns into one of these headline-making sectors that are doing so well that everybody, no matter who they are, starts to care. And that's what's happening with precious metals right now. So I foresee that Substack portfolio doing really well in the year to come.
Fantastic. John, maybe to mention it to our audience, where can we send them to follow your Substack portfolio?
I'm at rubino.substack.com, and the newsletter is aimed at actionable advice for all the crazy stuff that's going on out there. In other words, how do we invest? How do we manage our own lives? How do we manage our careers, given the crazy world that we're heading into? And so far, so good. Turns out there's a lot of actionable stuff we can do.
Yeah, lots of crazy stuff happening in this world to act upon. So, 100%. John, really appreciate you joining us. It was a great conversation. Always love catching up with you. So, thank you so much for coming on. Really appreciate your time. Everybody else, thank you so much for tuning in to Soar Financially. What an insightful conversation here with John Rubino. Go check out his Substack. His portfolio is absolutely killing it. I'm a reader of his newsletter as well, so make sure to go check it out, rubino.substack.com. And if you haven't done so, hit that subscribe button here on our channel as well. It's a free way to support us, and we tremendously appreciate it. How are you weighted in your portfolio right now? How many miners, explorers, developers do you own? What's the rating? What's the weighting? Let us know. Really curious. And thanks so much for tuning in. Take care out there.